Hello, welcome to the Solid as a Stock session, where obviously we're looking at stock trades. Now, let's just put the disclaimers on the top left-hand corner so you guys can read them. Please pause the video if you need to do that, to read them. Now, today is Friday, February 25th, and what we'll do is, same as always, we are going to, in fact, if I bring up the agenda, we'll go through the market environment and look for new opportunities. We'll look at some closed trades and some open positions. In fact, we'll do that first, just to reflect on what happened last time. For those of you that joined us last time or watched the video last time, then it will give you context to the trades that we did put on. What happened with them? Did we win? Did we lose? Did we cancel them? Did we break even? How would we have managed the trade? For any open positions, again, it gives you context on how we're managing trades in real time. And for those of you that might not have joined last session, might not have watched that one, even though they're not trades that you would have necessarily been part of the placing of, hopefully it gives you context again as to how we might manage our trades and why it would be that we would have cancelled trades or not, or trailed stops or not, or things like that. Then we'll look at some new trades, which I know is what most people watch these videos for, is to look for how we find and place new trades. So we'll do all of that. Now, before we do that, just to highlight where you can go if you have any questions. You've got Becky at tradewithufos.com. You've also got support at tradewithufos.com. So these are two different places that you can go if you have any questions. I've got things on my desk that are in my way, so I'm just moving them out of the way there. So you've also got tradewithufos.com/Becky. So let me bring up where that is, which is here. So this link here will take you to a place where you can get different apps and platforms. You can book one-on-one coaching, and there's a frequently asked questions section here too. So you can log in for free and post your own question. Or you might be able to see that somebody else has asked the same question, and therefore the answer is already there for you to learn from. So different places that you can go, different resources that will help you. So now that we've done that, let's go and have a look at the trades we placed last time. Now let me bring up my little Excel spreadsheet over here so we can have a look at what we placed. What we're going to do is we'll look at, I think we placed 6 trades last time, and we've also got some open trades that have been on for a while. So we'll go and have a look at those. So this one is Mitex Systems. We placed this on the 11th of February, so that was our last session. So let's see whether or not we would have still placed the trade. Now, interestingly, so it was a 2-day chart on the right, so let's have a look at this. So this would have triggered on the 11th, so triggered on the day that we placed it. A few days later, it hit our first target. Now, we're still in the trade, no need to do anything to manage this at the moment, no need to trail a stop, no need to close it out early, because we still have thick red dot, which is probability down, and we're short. So why would we get out of a short position if probability is that it continues downwards? Now, if it continues further down and hits our second target, then great, we would have made an overall profit on this trade. Worst that happens, if it moves against us and hits our stop, we will break even on this trade. So for the time being, this is an open trade and it's at break even at worst. I say at worst, of course we run the risk in any market, but particularly stocks, that the market might gap. Let's say it goes from here and it gaps up here, then okay, we take a significant loss from the gap. But outside of a significant gap happening, worst that happens is a break-even trade. Okay, so the next market that we looked at, let me just check my thing here, OHI stocks. See what happened here. Looks like we're still in this trade as well. So similar situation, we placed this on the 11th of February. I didn't make a little note apparently at the time, but we would have triggered in the day that we placed it. We're not at profit yet. In fact, let me squish to see where our second target is there. So let's do that so we can see it on that time frame as well. We've got weekly on the left, 2-day on the right. I think it was actually a 3-day from my notes that we would be using there. So We entered into the trade at the same time that we placed it, or on the same day that we placed it. So everything lined up, we wouldn't have cancelled it. We're on our way to hit our first target, not yet hit it. So, doesn't necessarily mean that we will. Nothing to do here for the time being, because we still have a thick red dot. We still have probability down, and we're short. So there is no need to do anything for the time being. We will let this hopefully fall towards our first target, our safety target, or perhaps it might go against us and stop us out, but we accept that when we trade. If in the meantime this changes from a thick red dot to anything else, whether that be a thick blue dot or a thin dot of any color, we would get out of the trade early anyway. So bear that in mind as another way to manage this, but for now we leave it as it is. So that's just open. Then we want PFS, that's the next trade that we're looking at. Oh, no, we want... Okay, so let's have a look here. It would have been placed on the 11th and not yet triggered. So unfortunately, we had a trade by the looks of it. I don't know what time frame we use, 144 minutes, that makes more sense. Okay. So we had a trade that was waiting up here. We placed this on the 11th of February, so I guess round about here. That's where we placed the trade, but it's never come back. The black line is our entry. Price hasn't even come up yet to us, so we're not in the trade. We would cancel this trade now because we placed the trade for many reasons, but one of the reasons that we do it is because we had the EMA lining up with our UFO, with our zone that we were taking. Now the EMA has moved down, it's no longer lining up. If price were to move up, not sure whether or not that EMA would follow it enough in order to coincide. So I would cancel this trade. So no longer a trade, it would be cancelled. And that's because essentially one of the rules for entry has now been broken. One of the rules for entry is that the EMA on our bigger time frame coincides with our UFO on the smaller time frame, and it was now too far away. PPBI, the next one. So similar to the others, we are in this trade, open. We were looking at a 3-day chart here. Okay, there we go. So we placed the trade on the 11th of February. It triggered on the 11th of February. It's on its way down. Now, we haven't hit our first target. We haven't hit our second target. So we're still open on this trade. No reason to cancel it because we still have a thick red dot, probability downwards. Now, just to be clear for those that might be confused with this, once we're in the trade, once we've already been entered into the trade, where the EMA is now irrelevant. We need the EMA to be within our UFO, which it was when we entered the trade. We need the EMA and the UFO to line up to enter the trade. Once we've entered it, of course, if it goes in our favor, the EMA is going to move outside of that UFO anyway. So it's okay that once we've entered into the trade, the EMA moves. That's to be expected. But if the climate changes, meaning we no longer have probability to the downside, then we want to get out of that position because we'd be short. We don't want to be short if we no longer have probability down. So that's why those two examples are different. This one has actually been triggered in, so it doesn't matter where the EMA is. Previous one had not been triggered yet, had not entered yet, and therefore the entry rules didn't suit anymore. Okay, so this one is just open. We will wait and see what happens next time. So PRMW, the next one. So this one, same situation, triggered on the day that we placed it. This was a 3-day chart as well. Let me see if we have a second target. We do. So far with this one, we've hit our first target, our safety target. So worst thing that happens is that price moves against us without a huge gap in the stock price. If it moves against us and hits our stop, we would break even on this trade. If it continues down quite a way and hits our second target, then we take the second lot of profit. So for the time being, we are open, we're at break even at worst, bar a big gap, and we're happy with that. So we will see what happens with those trades. Okay, then we have UBSI. BSI. Okay, again, let's scroll that down. We are open in this trade. Oh, no, we would be cancelling this trade now. Let me just move it out of the way and I'll cancel it. Close the position. Great. So let me show you why we did that. Because we placed the trade, everything was lining up, we got into the trade at this point. A little bit against us, moved in our favour, moved back against us. Let's have a look at when that happened. Let me do this. Okay, so as of the start of this week, as of the 22nd of February, the climate changed to a thin blue dot. What that means is probability is no longer down. It's nowhere. It doesn't have any probabilities at the moment. So if it doesn't have any probabilities, why do we want to still be exposed to what could be a huge loss? So we close the trade. By the way, I say a huge loss. What I mean is a defined loss, the loss that we were going to take anyway. But why be exposed to a loss if we no longer have probability of a reward? That's not to say, by the way, maybe something happens and this gap's down and okay, it's a shame that we missed out on it. But more than likely, if we no longer have probability down, that market might go against us. And if it goes against us, we would have taken our full stop out, our full loss, which we're comfortable with. But wouldn't you rather take a tenth of that loss than the full loss? So in this case, we cancelled out of that trade at a slight loss. Let me just put that in as a little note for myself. Okay, so that one's now done, cancelled out of that one. We then had AJRD. This is still in JRD. So this is still in, we're still at a profit, we've still got probability down, on our way kind of nicely actually towards our second target. So happy with that. With this one, we would have actually taken our first target at this point, actually a greater profit than what we would have expected. So this is where gaps can sometimes go in your favor. So in this case, we're at open, we're at worst break even. Likelihood is though, if price were to move against us in any significant way, the climate would change and we'd get out early. So most likely, unless it gaps significantly high, then we are at least a slight profit on this trade. So we're happy with that. Okay. So BSX. Again, I know for some of you guys that maybe didn't join us on these previous sessions and don't want the context of it, you just want me to look at new trades. You're going, oh, shut up. I want to just look at new trades, which is fine. It makes sense. But what I want to do is give you context as to what we do when we manage trades. It's not just as simple as put a trade on and leave it and you either win or lose. You can do that if you want and truly set and forget, but we want to make sure that we understand when might we close trades when we no longer have probability, and that's what we want to figure out. So for example, with this trade right now, it's gone in our favor. We already hit our first target quite a while back. This was a trade we placed on the 7th of January. Hit our first target relatively quickly, and then price bounced around between that, and we didn't do anything. Now actually, on the 31st of January, by the looks of it, which is here, so I don't think we looked at this last time, 31st of January, the climate went to unconfirmed. So we would have cancelled out of that trade at a slight profit because the 31st of January was kind of here-ish. So it might have been a slight loss at that point. So yeah, overall, we made a little bit and then we lost a little bit less. So overall, it was a slight profit on this trade. Okay. Now we've got a couple more to look at that we're still in from a long time ago. HE. Okay, so this one finally came against us. We've been in it for ages. We've been in it since December. Hit our first target. Looks like we would have moved our stop loss. We had a trailing stop, so we moved our stop loss to here, and then we obviously got stopped out on that. Would have been on the 11th of February, which is when we placed our short trade, so it makes sense. So overall on this trade, we would have taken a slight profit because we took 50% of the trade here, and then we lost maybe 10% of the trade there. So overall, slight profit. And then one more trade to look at before we look at some new trades. Wow, so this trade, we've been in it for ages and ages again. So we've been in this since 3rd of December by the looks of it, or it triggered there on the 7th of December. Did it? She says. Yeah, triggered there on the 7th of December. We still have a thick blue dot. Nothing has changed. Since the 7th of December, which was around about here, we've had nothing but thick blue dots, probability upwards, very slow, very sort of frustrating, I guess, movement to the upside, but we've now hit our first target. We would be at a break even at worst. There's nowhere that we can trail our stop to right now, so we'll leave our stop where it is. Worst that happens is we break even. Perhaps we take a small profit. Okay, so that's all the trades. I think it was 8 or 9 trades that we've just gone through that are still open, or that were still open from our recent sessions. So what we'll do now is have a look at some new trades that we can place. I'm just going to check the chat box. So you guys obviously let me know if you have any questions. Those of you that are watching live, let me know if there are any individual stocks you want me to look at, or ETFs that you want me to look at. Happy to analyze those for you. Otherwise, we'll use our scanner in Predictive Options Planner to have a look for different stocks, and then we'll come back to to TradingView to place them. Now, one thing that we want to look at is the FX Street economic calendar. Now, we just saw a little image there of President Putin that we need to, of course, be aware of. Let's just take a second to address that. Obviously not very nice what's happening, and it will invariably affect markets all over the world because it's a global issue, right? It's not just those two countries that are affected by what's going on. So we need to be aware that there's likely to be more volatility in the markets as traders. That needs to be something that we're aware of, as well as scheduled news reports that can impact the markets. So at the moment we have something obviously not scheduled. Nobody knows what's happening from one moment to another. So bear that in mind in your trading. Bear that in mind that there might be some volatility that might stop you out of currency trades, or might stop you out of commodity trades, stop you out of stock trades. Now, the US stock market, US individual stocks as a whole, probably won't be as affected as other markets, but just be aware of that ongoing situation and how it can impact global markets. Now, what I'm going to do here, I'm going to filter by only US, because we're only going to look at US stocks, and only by high impact news reports. Why? Because I want to know the scheduled news reports that are likely to have an impact on the markets that we're going to be trading. Okay, so I'm looking at the next week. So the news that was going to come out today already has. We've got news on Tuesday, Wednesday, Thursday and Friday that could affect US markets, as well as, of course, the ongoing situation in Ukraine. So be aware of these things. I would say place less risk on your trades. If you normally risk 1%, maybe risk 0.5%. You've got many reasons for volatility to increase and therefore your risk to increase. Also, perhaps try not to double up on many different trades. So what I mean by that is, if we're going long on a bunch of trades, maybe you don't want to place 6 or 7 longs. Okay. All right. So let's come and have a look at Predictive Options Planner, and we'll look for some new trades. So I'm going to go to my matrix, and we've got some criteria put in here. We want to look at all stocks, stocks and ETFs, all US stocks, minimum price of $15, you can make that $10, $5, $20. It's not have to be 15 exactly. Ideally, we want to avoid penny shares, basically. We want to trade US stocks that are expensive enough that it means that there's institutional interest. A minimum of 300,000 in terms of average volume. And what we want to be looking at here, let's go to earnings. We want to exclude stocks that have earnings that are coming out in the next 5 days. And then we want to filter by climate. And before we do that, actually, let's just confirm that we're actually going to be looking initially for some short trading opportunities. We're going to do that because the S&P, so this is the futures continuous contract that represents the S&P 500. Essentially, this is an overview of what the US stock market is doing. The US stock market has a thick red dot, probability there to the downside. So if the stock market as a whole has probability to the downside, then it stands to reason that the individual stocks within it are also likely to have probability to the downside. Now, saying that, if a particular stock that you're looking at has probability upwards, by all means, place a long trade if it suits your rules. You don't have to avoid going long if the whole market is going down, if your individual stock still has probability to the upside and fits your rules. However, correlation can help us. So we're going to start by looking at short opportunities. So it's the same as what we had last time. We're going to be looking at auto climate that on a weekly chart has a confirmed downwards climate, sensible, meaning towards the start of a downwards move, and near the 9 EMA, which is near to our ideal trading price. Click scan. Here we are. We've got a bunch of different trades here that we can place. I'm going to filter it by symbol so it doesn't move around. Obviously, if you filter it by price, then it's going to move around depending on what happens to the price. I want a nice fixed list here that we can go through. Now, I'm literally just going to click on each of these one by one, analyze them on top, Predictive Options Planner, which is the platform we've got in front of us. The first couple, I will explain in more depth as to why we are or are not going to place a trade. Once we've got that idea and we're comfortable with that, then I'll move on to be placing trades quickly or analysing trades more quickly. I do that, of course, for those of you that join us and you've been trading a long time. Might be frustrating to see many different trades being gone through in a lot of detail if you already understand the detail and the logic behind it. But if you're new to us, you don't want to just watch somebody flick through charts and say, yes, we'll place this one, no, we won't, if you don't understand the context or the reasoning. So I'll try and do a bit of both there, depending on the audience. Okay, so just as a quick recap, we are going to look at a weekly chart on the left-hand side, which means we're looking to swing trade. Now with stocks, they do gap, so normally it's either a good idea to be out of the trade before the end of the day to avoid a gap risk, or we want to make sure that we're going slightly longer term. So when we're swing trading, to me it's sort of longer term swing position trading. If we're short term swing trading, then that's probably one of the worst things to do in stocks, only because you're more exposed to the gap risk. The wider our risk, the less a gap risk affects us. So weekly on the left for that reason. And on the right, we're going to look at 4 different time frames. We are going to look at the 144-minute, 1 day, the 2-day, and the 3-day charts. Why? Because the right-hand side chart is there to help us execute our trades more tightly, shall we say. So on the left-hand side, the bigger time frame, this is helping us figure out if we're going to buy or sell, and ideally where we're going to look to buy or sell. So here we're looking at the auto climate and the EMA. For us to figure out where exactly that's going to be and what the numbers are going to be, we want to use a smaller time frame to be more specific. It doesn't matter necessarily exactly which time frame that is, because it still serves the same purpose. Now, we don't want to go too far away. If we're looking at a weekly on the left to help us make our decisions, we don't want to be placing trades on a 10-minute chart on the right. It's too small, it's too far away from what we're doing, it's too irrelevant to what we're doing. So I'm looking at 4 time frames within a tight range of each other, close enough to each other to make it worth it. So hopefully that makes sense. By the way, just a reminder, guys, anyone that's watching live, if you have any questions, just put them in the chat box. Always happy to help. Right, so let's start with the 144 minute and we will see what we're going to do. I think we won't place a trade on this one. And the reason for that is because the EMA price, as we can see, is almost exactly where current price is, right? It's 20.28 by the looks of it. Now, if we're going to be selling, which we would be selling, because we have a thick red dot on our auto climate, probability is down. Probability is down, definitely don't want to be buying, right? We want to be selling. So if we're going to go short, we want to go short around about near the 9 EMA, where we have red UFOs on the right hand side. Red UFOs are where sellers are. We want to sell where lots of sellers are because it gives us more probability that it works. Because the EMA is very, very close to current price or is at current price, likely current price has already wiped out the sellers that might be there, but we will have a look through the different time frames and see. Nothing there, nothing there, and nothing there. Not surprising. So we have no sellers on the right hand side around the same area that we want them to be based on what we see on the left hand side. We need these things to combine. We need these things to combine because it gives us greater probability of our trade working. The higher the probability of our trade working, the happier we are, of course. So nothing there. Let's look at the next market and see what's happening. So on this next market, we have a thick red dot, probability down. We have our 9 EMA at 97.08, which is just above current price. Now, we won't find any UFOs there, very unlikely, because it's in the middle of a gap and we don't find UFOs in gaps, but let's just filter through just to see. Okay, yep, nothing there. Not that we expected it to be there. We wouldn't find buyers or sellers in the middle of gaps because by default, the gap doesn't have any price information. Okay, so this one here, CNO, Financial Group, big red dot, probability down. We've got our EMA at 24.88, which is around about here. What we're going to do is cycle through timeframes, see if we find a UFO, a red UFO on the right-hand side that coincides with that. Nothing on this time frame, nothing on that one. On this one, just looking where that starts. On this one we do, so this is the 2-day. Let's look at the 3-day as well, nothing there. Brilliant. So this is the first trade that we will be placing. So let me just double check that we've got the room to do that. Looks like we do. Happy days. So I will explain this one in a little bit more depth. We'll place it and then we'll smash through and we'll just click through until we find more opportunities. So CNO Financial Group, on a weekly chart, we have a thick blue dot on our auto climate. We use auto climate to tell us where the probabilities lie in terms of the upcoming market direction. So if this market is likely to move down, which is what that thick red dot shows us, we want to sell. We want to be selling where we have probability to the downside. But we don't just click sell in the middle of nowhere. That makes no sense. We want to sell where we have higher probabilities of that trade working for us. We do that by combining two more factors. 9 EMA, which is that number there, 24.88, it's this line. 9 EMA, which stands for exponential moving average, is an average that follows price, and oftentimes if price hits the 9 EMA, so if it hits the average, the exponential moving average over the last 9 data points, if price hits the average, people will buy or sell. If price is below the average and then it hits it, people sell. If price is above the average and then it hits it, people buy. In this case, people would be selling at the 9 EMA. Now, that's not enough for us. Yes, some people might be selling at the 9 EMA, but there's loads of reasons why people might buy or sell. So we need more evidence that we have a probability of the trade working. So we use Alter UFOs, which is our proprietary app. What it does is show us where significant buyers and sellers are. The red ones show us where sellers are. So we see this red UFO, which shows us sellers between these prices, that coincides with the 9 EMA price. So within this area, we will have sellers and sellers in the context of a downward market where people are selling. Sellers, sellers, and sellers gives us more probability that there is selling going on and therefore that price will fall. Not to say it 100% will be, we're going to manage our risk just in case, but gives us higher probabilities. So we have the numbers given to us here by our UFOs, so that gives us our reference prices for our entries and stop losses. So let's take a quick look at this. I'm just going to put it on my little Excel spreadsheet. So today is the 25th of February. This is CNO. We're looking at a 1 week chart and a 2-day chart. We're going short. The entry is 24.54. The stop loss is going to be 26.74 plus 10 cents. So 26.84. Give it a bit of wiggle room. Our final target, we're going to use this one here, which is 19.67. Just pause for a second and explain that. The only thing that can stop sellers is buyers. On the weekly chart is where we have probability down. So on the weekly chart is where we look for evidence that something could go against that. So a lot of buyers are around this price. That's not to say that buyers won't come in future, but for right now, we see that the buyers are waiting down here. So we will get out before that happens. So 19.67. And we'll figure out our first target in a second. So let's go and place this trade and then we will, there we are. Let's go and place this trade and then we'll go through quicker and find some new opportunities more rapidly. Okay, so CNO, let's get rid of that. We had 24.54 is the entry, 26.84 is the stop loss. It's quite a wide area, but we've got room until it hits our target 2. So the reward to risk ratio is still okay. So that is 19.67. And then we'll figure out our first target, our safety target, by just using the mathematical tools that we have on TradingView. It's one of the reasons why I use this to place trades, because it's very easy to use and it does the maths for me. So I'm risking $50 per trade as an example. You will risk the amount of dollars per trade or pounds per trade or euros per trade, or whatever that is comfortable for you and that fits your risk tolerance and your trade plan. The first target is always 1-to-1 away. If we're risking $2.30 per trade or 230 cents, then we will be, or per stock, sorry. So we're risking 230 cents per share. So we are therefore taking 230 cents per share as our first target. Risk $50 in the first instance. The reason that I risk $50 is because it's half of 100. It's just a nice round, easy number. You guys, of course, make sure that you risk what makes most sense to you. So there we go. I don't know why this keeps happening to me. When I place one target, it cancels the other one. But anyway, we would place both of them here. Let's put a little note. So placed on the 25th February 2022, 1 week and 2 days. Brilliant. That is the first trade that we've put on. Again, I know I took a little bit of time to explain it. So for those of you that trade with us regularly, I know that was maybe a bit slow. Let's now get quicker by looking into our different opportunities and see what we've got. Okay. Oh, we already looked at this one, I believe. Maybe we didn't. Yeah, we did. It was the one with the gap. Okay. CNP. So let's quickly have a look through 27.29. Nothing there. Okay, we've got a trade here on this time frame. I'm going to just filter through and see if we have a better opportunity on another time frame. So just pause for a second to explain this. We have this number up here, which tells us essentially the probability rate of the UFOs. It's the probability rate of the UFOs to push price to another UFO. That's how it's defined. So that doesn't mean 54% chance of 1-to-1, 2-to-1, 3-to-1. It's not like that. It's probability rate of a varied reward to risk ratio because it's dependent on UFOs. Now, we have on the 2-day chart 54.4% probability. On the 3-day chart, we have 56.2%. So we have higher probability by taking the 3-day chart. So that's what we're going to do. Okay, so let's just make a little quick note. This is Flex, cool sounding stock as well, isn't it? 1 week and 3 days, we are going short. The entry is 16.87. The stop loss will be 18.10. We're going to add 10 cents to that. 10.96 is going to be our second target. Unlikely that price goes that far, to be honest, so we'll likely close out some point in between, but we'll place the trade to take it if we can. Okay, let me put this in here. So the entry was 16.87 and the stop loss was 18.10, which I did deliberately. Brilliant. And the second target is 10.96. Okay, that's what that looks like. Let's now figure out our first target. 18.10 is the stop loss, $50 risk again. As an example, you guys pick what you want. First target is $15.64. Here it goes. 16.87 entry. Stop loss is the same. Risk is the same. Profit target in this case, 10.96. Okay. There we go. So that's that trade put in. So let's come back to top and have a look at our next list. Funko. 17.39. So nothing there. Nope. Okay, nothing for that one. Again, I'm just looking through the different time frames and seeing if we have UFOs that line up. So we already do on this one. So this is FTS, Fortis Incorporated. We have thick red dot, probability down. We have our EMA at 46.19, which is for here. So within that UFO. Now, I don't want to take it on this time frame, and the reason for that is because this number is not as high as I'd like it to be. I want that number to be 50% or above. You guys might have different rules. You might say 45%, 40%, 60%. The stricter you are on that number, the less trades you place, but the higher the probability that they work. The lower you are on that number, or the less strict you are on that number, the more trades you place, but the less probability that they work. So pros and cons, but for me, just to be consistent with the rules that we use, wouldn't be a trade I would place. This one, we do have better probability, but I'll explain to you why in a minute we won't place it. And let's see if we can find another one. Let me just draw this out real quick. And I'll explain to you why I'm umming and ahhing, but I'll just, so it'll be 46.20. Oh. Let me just put a couple of those in there. Okay, so 46, come on. 46.20 would be the entry, and then 47.90 would be that. I think, yeah, we just about can take this one. So we're going to place this one using a 3-day chart. The reason I wanted to have a quick look at this is because our first target is always 1-to-1 away. Our second target needs to be further than that. Because if we had buyers closer than 1-to-1 away, so I think 1-to-1 might be here, we have buyers slightly further away. If we had buyers here, then it stops or it limits the probability that price can even hit our break-even point. the whole point of the break-even point is to give us higher probability of at least break-even or lower probability of losing. If we have buyers closer to us than that, then it reduces the probability even more. So that's why on the 2-day chart, or the 1-day chart, sorry, these two areas together that we need to combine is too big. It's too much of a or too big a risk, so that if you were to one-to-one that, then the one-to-one break-even point would probably fall past these buyers. We don't want that. So we're going to use the 3-day chart then to help us place this trade. So FTS, one week, 3 days. We're short. The entry is 46.20. The stop loss is 47.90. Final target 44.04. We'll check our target 1 in a minute. So FTS. Okay. It's a 3 day, so let's just put that on there so we remember. So entry 46.20, stop loss 47.90, 6.20. Brilliant, so that's our area. I'm going to put a little note here. I know I haven't put a note on all of them. I will go back afterwards and do that. So placed 25th February 2022. 2022, 1 week, 3 days. Okay. Second target is 44.04. And we'll see in a minute what the ratio is. I think I was right visually to see this. 46.20 to 44.04. Our first target is 1-to-1 away. Sorry, our stop loss is 47.90. Apologies. So our profit in this case, so 44.50 is 1-to-1 away. So just we've got room to take 1-to-1, break even, and still have a little bit of space to take a slightly bigger target. Okay. Same again. In this case, 44.04. Brilliant. Alrighty, let's come back and we will just keep going. Keep going until we need to stop finding new trades. This trade, I believe we're already in. We've just come out of. Let's have a look. I'm not going to have a look at this one. The reason for it is only because I know we've just looked at this trade as one that we were in. And we've got this on the, sorry. We placed this trade a few weeks ago, or a couple of months ago now. We've just looked at it and said, okay, this finally would have stopped us out. This is what happened. I need to keep this on here, the drawings, to just help me to later on put in all of the actual information for this, what happened and when. So I won't look at this trade now and delete it and put a new one on, because then we'll have either take away the data that we need to actually track things properly, or have too many things on the screen, make it harder for people to understand. So if you want to look at Hawaiian Electric Industries and analyze that, by all means, please do. So HIG, let's have a look. No, we've just slightly on the wrong side of that, so no. Highwoods, again, it looks like price has gone past the EMA, so no. LTC, let's have a look at this. Ideally, if we can get within here, I'll be happy with that, and I'll explain why in a second. Okay, so nothing on that time frame. 24.24. Nothing on that one. Nothing on that one. And nothing on that one. Oh no. No, we've got one on this one. Brilliant. 144-minute chart. Brilliant. So the reason why this is even better is because we have red dot, probability down, red UFO, sellers, same, or enveloping the EMA price, sellers, in another red UFO, sellers. So we've got sellers, 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 and sellers. We're happy with that. If we're going short, no, we're not. Let me just explain. It must have not loaded the full amount because that number's changed. So now that we've loaded the full data, it's showing me 43.48% as our probability rate. Unfortunately, when we do these sessions, we stick to a 50% probability rate, so wouldn't place this trade. If your personal rules allow you to place trades that have a lower probability rate, do so, but I won't be for that example. Okay, nothing there, nothing there. Do have something here, 43.25. Brilliant. So we are within this UFO right now. So we're actually going to go at market, which means our entry will be whatever the price is right now, which currently right now is $43.16. This is Main Street Capital, I think. 1 week and 3 days. Short, 43.14. 43.10. It was moving a little bit, but 43.10 for now is going to be our entry. Stop loss 44.44. Final target 38.05, and we'll figure out the other one in a second. So let's try and place this quickly because it's a market order. So this is main. She says let's place it quickly, and then I'm confusing my mouse. Okay, so we are going at market with a stop loss of 44.44. Now our profit target will be 1 to 1 away, so 41.50. Okay, I'll put the drawing in a second. I just want to do this quickly because it's at market. Same again, same stop loss, and the profit target is 38.05. Okay, so let's draw this in. So we got in at 43.13, I believe. 43.13. Stop loss is 44.44. Placed our 1 to 1 trade away. It was 1 to 1 or whatever that was at the time. And then our final target is 38.05. Okay, let me put a little note on that. So we went in at market on this one because there's no point us placing the trade at the start of the UFO because that means selling it for cheaper than it is. Why would you sell something for cheaper than it is if you can sell it for what it is? So that's what we've done. We've sold it at the right price, which is the price now, still coinciding as we need it to in the trade, and we will see what happens. It's 25th of February, 1 week and 3 days. Great. We have time to look at 1 or 2 more trades. Let's have a look. For some reason, my laptop is about 5-6 minutes quicker than real time. So I have to check my watch. So 47.58, nothing there, nothing there, nothing there, nothing there. No problem. 22.40, nothing there, 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 nothing there. Again, for those that might be newer to this, and this is quick for you, I'm simply looking to see whether or not we have a UFO that lines up with the EMA. If it doesn't, then I switch timeframes. If it does, then I'll stay on the time frame and place the trade. Nothing there, providing the other sort of extra rules that I've explained also line up. Nothing there. Nope. Okay, let's have a look. This is a wide area. No, we won't place this, and I'll show you why visually. Okay, so the entry would be current price 18.34. The stop loss would be 20.91, which is up here. So you'll notice visually, hopefully we can see that, the risk here to here would be greater than the reward if it was 1-to-1 away. Sorry, the risk is greater than reward if we were to hit our second target. We need at least 1-to-1 because that's where our safety target goes. Our safety target cannot be in a place where we're at risk, and we will be at risk of a short if we hit buyers. So we get out of this trade, or we wouldn't even place this trade, we move on. The zone is too big, giving us not a big enough reward to risk ratio for us to comfortably and safely place the trade. So this one would need a UFO at current price, which we don't have. Let's have a look at this one. So 24.11 is where we want a UFO here. Nothing. We'll get to the end of the list if we can, and then we'll finish the session. Okay, this one on a 3-day chart gives us... Okay, so I'm just squishing here. You can see there are actually no green UFOs on the left-hand side, which shows us that actually we do have kind of clear rain to the downside. So this being big doesn't matter so much. So I'm just going to look through different time frames to see if we can get that right probability rate. So this one is 54%. This one doesn't have a UFO. This one, 54.76%. That's 56.97. That still works. Nothing there. So let's have a look again. So the 1 day was 54.76%. And the 3-day was 54.39%. So we'll go for the 1 day. Again, we will go at market on this one because it's already in there. This is QSR. 1 week and a 1 day short. Going in at market, which is 56.41. Stop loss at 57.81. Final target will be trailing. And our first target we'll figure out in a second. QSR. Now, as I said at the start, there's a lot going on at the moment that's going to be affecting different markets. So we've placed 1, 2, 3, 4. This will be the 5th short that we would have placed. I would recommend not to place loads of correlated trades at the moment. It's not particularly safe to do so if you know there's a lot of volatility and you essentially place the same trade 6 times because you're shorting a US stock that is likely within the indexes. You don't want to be exposing yourself to be stopped out on all of them. So I would be a bit more specific. Maybe you do it based on price, maybe you do it based on other rules that you have, rather than place all of them. 1 week, 1 day, T2 trading. You could place all of them, it's just more so actually we'll go in at market. Sorry, we're going at market, aren't we? So it's at market with 57.81 risk and 450. Oops, move. Gently right clicking. 51, so 54.79. So we got in actually at 56.30. There we go. That's the first half. Second half, same thing. 50 bucks. In fact, actually, sorry, it's a trailing stop. So actually, we won't put in a profit target with this one. So we'll just go in at market with a stop loss. And then as price moves in our favor, If price moves in our favour, then we trail our stop loss behind price, locking in profit. Okay, so we have placed 5 trades now to the short side. Like I said, placing many stocks trades that are either all long or all short is not really spreading your risk. It's not really hedging yourself there. So you might want to be a little bit more conservative about the amount of trades that you're placing at the moment, especially because of sort of craziness, if you want to call it that, that's going on in the world at the moment. There's also quite a few scheduled news reports coming out on US markets this week as well that might impact US markets. So if you're short a bunch of stocks that are going down with the entire market, and some news comes out, something happens that pushes price upwards on all stocks, then you've lost all of your trades. It might be that something comes out that pushes price further down on all stocks, and therefore you've made more money than you thought. But you run the risk when you do that, so bear that in mind. Now, if you have questions, best place to go to is tradewithufos.com/Becky. From here, you can get apps and platforms, you can book one-on-one coaching, or you can come down and take a look at the frequently asked questions section and see questions that other people have asked and the relevant answers. You could also log in for free and ask your own question, or you can email me, becky@tradictive.com. So hopefully that was helpful. We spent the first half looking at trades that we've already placed and looked at what happened with them. Did they win? Did they lose? Are they open? How would we manage them? So whether or not you followed last time, hopefully it gives you an idea of how we manage trades, what our rules are for that. Then we looked at some new opportunities by using the scanner on top, Predictive Options Planner, to find stocks that had probability to the downside, because the market as a whole has probability to the downside. And we looked at individual stocks there and we placed 5 new trades. So next time we'll come back and have a look at all those trades that were open and the new trades that we've placed, see what happened and analyse from there. Any questions, you know where to go. Otherwise, guys, have a great end to your trading week. Have a great weekend and I will see you next time. Take care.